I think we should go ahead and start. We have a lot.
Cool. You want to kick it off, Parth?
So, welcome everyone. I'm Jayashree Vakil, Thai Austin president. Some of you might be already on here, but we are here for a very, very, very fun subject, but very important subject today: cryptocurrency, digital assets. And very excited to bring both our speaker and our moderator on the subject. Just quickly about Thai Austin. If there are people who are not familiar with Thai, we truly exist to foster entrepreneurship. And we do that via mentoring, education, investing, and everything together. We are the largest entrepreneurial organization in the world. We fall under Thai Global brand, and we are truly the largest in the world. Thai Austin particularly takes pride in running few of the very successful programs. One of them is women entrepreneurship. And if you might have heard already, or if you joined in a little bit earlier, that this is the first year when Thai Austin will be hosting or conducting a Thai women pitch competition in August. And we'll have some more information towards the end of this webinar as to when it is and where it is. We also run a lot of, we also help a lot of students, college and high school, under our Young Entrepreneurial program. And a lot of these are based on mentorship. We love mentoring. Our core group of charter members are all mentors, and all together we have a lot of outside mentorship available through our partners. And we like to connect, educate, and help wannabe entrepreneurs, the next generation of entrepreneurs, learn the ways and the integrate insights of entrepreneurship, startups, business, everything, and that's what we help with. Angel Investors is another program that we have, initiative that we run, where we actually invest in startups. And that's one of the things you'll be seeing in August when we run the Women Entrepreneurship competition. And we have invited early and late women entrepreneurs to participate, and we have had tremendous response, and we are taking 4 of them to the final local pitch here. And we'll share a little bit more about that in a little later towards the end of the day on this webinar. I want to welcome our moderator first, Parth Vakil. As you may see, the last name, we have the same last name. So you're probably kind of thinking that there is a family connection. And yes, there is, just so that everybody's clear on that. Parth is an Atlanta-based partner at the Piedmont Group, and he has been performing really well. Last 4 years, he has been in the top 40 financial advisors, and he's under 40 years old, by the way. So I'm proud of him. He has made $1 Million Roundtable conferences or producers since 2019. He has met all of that. And he has clients ranging from Fortune 500 companies to startups, so the full range of multiple industries here. Before I turn it over to you, Parth, I want to make sure that everybody understands that this is slightly different today. Typically, we run our webinars such that all of the attendees type in their questions in the chat or the question answer section, and the moderator picks it up and asks the speaker. This time we are going to do it slightly differently. We want this very interactive. So we want everybody to raise hand, use that feature, raise hand. The moderator will call upon you, and we will unmute you at that time, and we'll bring you live on this webinar. And you can feel free to make a comment, ask questions, discuss, or anything, whatever you want. So at this point, Parth, I'd like you to take over, and you are the one who's going to introduce the speaker.
Great, thank you. So enough about me. Time to move on to our featured speaker for this evening's webinar. We're very lucky to have Jason Yanowitz here with us today. Jason is the co-founder and CEO of Blockworks, which is a financial media brand based out of New York City. Jason has been in the industry since 2015. So he's really seen the full evolution, I guess, life cycle of the crypto space. Prior to founding Blockworks, Jason spent some time with a data analytics startup and helped build the business development team over there, and also has some VC experience with Intuitive Venture Partners. So with that, Jason, thank you for being here with us today.
Yeah, thanks for inviting me, Parth, and thanks for Ty Austin for hosting such a great webinar. And hopefully we make this pretty enjoyable, and I get sick of hearing my own voice pretty quickly, so we'll see how this goes.
Yes, and I guess as Jayshree pointed out, everyone, please do type in the box if you have any questions, and we'll bring you on here to ask Jason whatever it is that comes to mind. So Jason, I guess before we get into it, tell us a little bit more about Blockworks and really when you got into the space, why you got into it, and why it was so interesting to you.
Yeah, I'll try to keep this as short as possible because I'm not that interesting. I think the topic is interesting, but I'm not that interesting. But I got into Bitcoin in 2015. I was living in Budapest, Hungary. The Hungarian students that I was studying Hungarian economics and history with were very interested in this self-sovereign money because their parents had lived under Soviet Union in Hungary in the 1950s and 1960s. So anyone who's interested in Hungarian history, which I expect is nobody, you'll know that it was a pretty tough time to live in Hungary under the Soviet Union back then. And I got into Bitcoin. I came to the United States, to New York. I worked at a venture capital firm, worked for these real old school Lehman Brothers, Bear Stearns guys. Was kind of the young guy at the firm trying to get them to buy into Bitcoin. Didn't work so well because there was a lack of information targeting kind of the gray-haired hedge fund manager. There was a lot of good information on Reddit and Twitter, and that's better for like the 21, 22, 23-year-old, not so much information for the family office, financial advisor, RIA, hedge fund, endowment, pension fund, portfolio manager crowd. So we launched Blockworks basically with the goal of building a Bloomberg for the digital asset ecosystem. Today, we posted conferences in multiple countries. We have a whole editorial team that puts out news on the industry. We have 15 different podcasts. We have newsletters, and we will end the year with about 40 full-time employees. So business is going well, and it's honestly thanks to the industry. It's a really fun space to work in.
That's great. So, I mean, Jason, I guess, there are a million different ways we can, approach this topic here. I guess I'll start off by saying that crypto is obviously a hot topic that seemingly dominated a lot of the headlines as of late. Before we get into all of that, for people in the audience who may not be as familiar with Bitcoin, cryptocurrency, first off, what is Bitcoin? What is cryptocurrency, and what is blockchain technology?
You want me to answer that in like 15 seconds, or how much time? No, so I think, it's when the bull market of 2017 happened. If people remember the price of Bitcoin running up from $1,000 to $20,000, it was mania. It was hype. There were these things called ICOs. I would get calls pretty much every day saying, "Can I use a blockchain for this?" Right? These were so I think before we dive into DeFi and crypto, it's important to understand Bitcoin. And before understanding Bitcoin, it's important to understand blockchain at a very high level. And we'll kind of cruise through this. But we used to get the question all the time, can I use a blockchain for this? And our response would always be, can you do that with a regular database? And in more cases than not, the answer is yes. Because if trust isn't an issue, there's really nothing a blockchain can do that a regular database can't do. And I'm only going into the blockchain side of things because I think there's some folks in the audience who they want to know how, quote unquote, blockchain will impact real estate, or they're interested in like enterprise blockchain and things like that. The reality is it's probably not that useful for those use cases. Blockchains are useful for sharing data with a group of non-trusting parties. And the reason it's so tough to oftentimes understand is because we're in the United States, right? And in the US, the financial system works, the government works, our currency works, money works, right? But in places like developing nations, places like Argentina, where every generation has used a different currency, right? It's a little bit different. So the world is filled with these organizations that have earned our trust: governments, banks, universities, corporations. And in most cases, these organizations work really well, right? Aside from a couple of well-known hacks like Equifax and Sony and Yahoo, Americans trust organizations. But in other places of the world, this isn't actually the case, right? Centralized organizations that control your data oftentimes don't properly count the vote, or they don't properly protect your money. And so blockchains offer a way to replace these organizations and their centralized databases with distributed databases that are secured by cryptography and consensus mechanisms. And for any database nerds out there, the distributed database kind of eliminates this single point of failure that people out there might call it a honeypot problem, right? Which is a characteristic of centralized databases. So we can get into the advantages, the disadvantages, all that kind of stuff. But the short of it is that if trust is not an issue, blockchain databases pose really no advantage over a centralized database. And 95% of the time, it's better to just use a database. So I just want to get that out there for the folks who are maybe working at a Fortune 500 or working at, they're doing corporate development or they're on a product team. Usually 95% of the time, normal databases work much better. They're much faster. And that's the way to go. Blockchains open up a series of new things that we can get. And I'm sure we'll get into this, but that's my kind of spiel on blockchain.
And one thing that you said, Jason, I guess really stood out to me, which is the lack of information and education surrounding, Bitcoin, other cryptocurrencies when you were in your previous role. So that brings me to, I guess, one item that's been fascinating to me, which is the evolution of Bitcoin from, this hot topic on Reddit to something that's now, honestly pertinent to the global macro conversation. We have central banks printing money, rates being pushed down into negative territory, and now there's, some signs of inflation. Where does Bitcoin fit into this conversation? And can you speak to that global macro conversation a little bit?
Yeah, of course. I don't want to do a big presentation to the audience because I find that those really boring, but I do have a couple slides that I think will be helpful for this. But you're exactly right? The macro environment right now is rocket fuel for Bitcoin. We dropped interest rates to zero. We printed a bunch of money. Janet Yellen, who's notoriously pretty inflation friendly, became the Treasury Secretary. The Federal Reserve is targeting over 2% inflation. Lagarde is saying that inflation is probably here to stay. It's not transitory. But before we get into that stuff, I think it's really, I'm going to share my screen for a second. I think it's important to understand what is Bitcoin, right? Because there are actually a common misconception is that it's one thing. Bitcoin is a lot of different things to a lot of different people, right? If you're a hedge fund manager in New York, you probably care about the digitally scarce asset that is resilient to inflation. But if you're somebody living in maybe Venezuela, where there's really intense capital controls, you care more about the monetary settlement. So Bitcoin with a big B, capital B, Bitcoin, is the most powerful monetary settlement network in the entire world. Right? It's better than Swift. It's better than it's the fastest, easiest, most transparent way to send money globally. Bitcoin with a little b is a digitally scarce asset. It's the native token for the larger Bitcoin network. And the reason that you need a little b Bitcoin, the reason that you need a token is because the way that blockchains are secured is you have miners who are basically securing the network. The only reason that they secure the network is because there's a monetary incentive to secure it. So the Bitcoin big B, the monetary settlement network is secured by miners. The miners get paid little b Bitcoin, which is when you see CNBC, the price of Bitcoin is skyrocketing. They get paid that. And that's their incentive for securing the network. So I just say that because Bitcoin's really tough to explain and to understand oftentimes, because there's a lot of misconceptions about what it is, because it's a lot of different things to a lot of different people.
So in terms of, and sorry, Jason, I have to ask you this, especially in the past, 2 weeks to maybe 6 weeks, there's been a lot of news stories about Bitcoin, and I guess differently from maybe some of the stories earlier this year, which were more to the tune of, well, Bitcoin prices are skyrocketing. We're now seeing a lot more, volatility than maybe was existent a few months ago. And at least, for someone like myself in the financial services space, we get asked a lot of times, is this the end, or is this something that should be worrisome to us as investors? What would you say to that? I mean, is Bitcoin truly a fad that, we saw a run up in price on? Is it something that's here to stay? How would you respond to some of the folks who are genuinely worried about the future of Bitcoin?
Yeah, so let's break that question down into two different questions. The first one is around volatility and the price. The second is around user adoption. In terms of volatility, I think I usually push back on folks and say volatility is not bad, right? There's this common misconception that volatility is bad. Volatility of an asset just determines how much of an asset you should hold in your portfolio. So there's the common 60-40 stocks bonds portfolio, right? Well, the way that an investor allocates their portfolio oftentimes is dictated by the volatility and by the uncorrelation or by the correlation of an asset. So volatility by itself is not actually bad. Volatility on the upside, people love. Volatility on the downside, people hate, right? So let's talk about volatility on the downside. Let's talk about Bitcoin having just dropped 50%, right? It's a big old drop. Investors don't like a drop of 50%. Well, they're quick to forget that Bitcoin just went up 600% in a 6-month period. So, but that's okay. So zooming out from that even, Bitcoin has seen 3 drawdowns over its life, right? Bitcoin was launched in 2009. Bitcoin over the past 12 years has seen 3 different drawdowns of over 80% in its lifetime. It's still the best performing asset of the past decade. But let's make a comparison to Amazon, right? Amazon, one of the best stocks that you can own right now, blue chip, everybody loves Amazon. Amazon has drawn down more than 90% twice in its life, right? Twice in Amazon's life, the price of the stock fell 90%. The intra-year drawdown of Amazon is over 30% on average. So it's a pretty volatile stock in that sense, right? So Bitcoin has done similar things, but really where you should look, Parth, on the price side is not the highs, not the volatility, but what Bitcoin continues to do is set higher yearly lows. So that's the number that I focus on, is the lowest price every year, and every year that continues to rise. So I would say don't look at the highs, look at the lows. On the user adoption side, I'm going to jump to, I actually put together this quick slide on it. Bitcoin has gone from a white paper in 2008, 2009 to a dominant digital asset with a market cap of, well, when I wrote this, it had over $1 trillion. It's obviously fallen a little bit since then. But I think the thing that's more important than market cap and price is the adoption rate, right? If you look at the bottom, Bitcoin's growth and adoption rate has been significantly faster than the internet, faster than any sort of virtual banking, like when PayPal came out, faster than the mobile phone revolution. And I think it's pretty phenomenal when you take out the price, comparing it to other things that we think are innovative, like Google, Amazon, Apple, and Microsoft. It took Bitcoin 12 years to reach $1 trillion. It took Microsoft 44 years, right? Apple 42 years, Amazon 24 years, and Google 21 years. Now, obviously, there's inflation and things like that, but inflation aside, it's been kind of the apex predator of the financial markets for the last decade.
Yeah, I mean, I guess your analogy and the parallel you drew between Amazon and Bitcoin, I think is really interesting, right? Especially with Amazon being considered this blue chip stock that everyone wants to own, as you alluded to. That makes me, I guess, wonder, being in the investment management world, we're seeing a lot of institutional money, right? Pension funds, insurance companies, endowments that are starting to add or increase the Bitcoin exposure that they have in their portfolios. Why do you think that is? Why do you think now is the right time, and why we've seen so many, inflows into the Bitcoin space? And how do you think that's going to play out here in the next, 5-10 years, Jason?
I've seen Bitcoin go from this tiny little asset and this tiny little technology that we talked about on Reddit and on talk forums to something that every single institutional investor is at least talking about. And a lot of them quietly behind the scenes are allocating to. And the reason is that institutions have spent decades looking for a non-correlated asset that they can use to get diversification in their portfolio. They're starting to realize that Bitcoin is a better store of value, it's more transparent, and it's more secure than any other asset out there right now. And I think COVID, honestly, and I know it's kind of a touchy subject, but I think the government's and the Fed's response to COVID, where we've printed, more than 20% of all the money in all the US dollars in existence have been printed in the last 12 months. That is really what caused folks like Paul Tudor Jones and Stanley Druckenmiller to buy Bitcoin, is both as an inflation hedge, but I think you're just going to see an increase in people electing to put their wealth into something that is controlled by software and math and can't be manipulated by a single politician. And I'm just going to show this chart, right? Honestly, you're teeing these charts up pretty well, Parth. I swear we didn't prep for this, but if you look at the M2 money supply, people look at the price of Bitcoin and they say, oh my God, that looks like a bubble. Look at the M2 money supply. That thing's going straight up. Look at the federal debt. That thing's going straight up. Now compare that to the supply of Bitcoin, right? And I think this, for the folks in the audience who don't understand the supply of Bitcoin, this is probably my favorite aspect of it, which is that unlike any other commodity in the world, the supply of Bitcoin is fixed, right? So every 10 minutes, 6.25 Bitcoin get released into the world. Compare that to, let's take any other commodity, or honestly, a lot of other things. So, I was treating myself the other weekend to a lobster roll, and the price of a lobster roll is $50. And so I asked them, why is the price of a lobster roll $50? Last summer it was $25. And they said the price of lobster has doubled. Why did the price of lobster double? Because supply stayed the same and demand has doubled because there's a lot more people in the market trying to buy lobster. Well, just like any other commodity, copper, wood, like lumber, anything like that, when the demand goes up, supply stays the same, price goes up, right? Well, when price goes up a bunch, supply then goes up, right? There's going to be more lobster fishermen. They're going to yank the supply up, and then eventually the price will fall back to the equilibrium price of the commodity. Bitcoin's completely different. When you yank the demand up, supply can't change. It's programmatic and it's fixed. So no matter how much demand there is for Bitcoin, the supply will stay the same. And that is a really interesting programmatic monetary system that doesn't exist right now.
So the fixed supply, I guess, is obviously a big, factor in terms of the value of Bitcoin, moving forward here. So I've got to ask you this: the U.S. dollar has forever been considered the strongest safe haven asset in the world. Do you think that Bitcoin is a competitor to the U.S. dollar? Or would you say instead that, Bitcoin and the US dollar will maybe live alongside one another. I'm sure that'll spark some other kind of questions from the audience, Jason.
Yeah. By the way, I can't see the audience questions right now because I'm sharing my screen. So if people have things, I can't see them. But you said, the US dollar has been kind of the dominant currency for forever, right? It really hasn't been forever. It's been for, maybe 110 years. And so I think it's important to recognize that about every 100 years, the global reserve currency changes hands, right? Portugal to Spain to the British, right? The US, things like, so it changes hands, and not in that order, by the way, that I just said. And when you really zoom out, like, what is money? Not to get super esoteric here, but you went from a barter system to the seashells, to beads, to stones, gold, but then gold was really tough to transfer. So you create metal coins. Metal coins are tough to transfer. So you get paper money. The paper money was backed by gold until it wasn't backed by gold in 1971. You get plastic cards in the 90s, right? And now where we're at is electronic money. So I think I'm going to answer this question in two parts. Money is a belief system, right? The only reason why you and I use it is because we believe it has value. If I give you $1, you give me a good or a service. Bitcoin has value, not because anyone says it has value. Bitcoin has value because two people who exchange it believe that it has value. So I think there are a lot of people who love Bitcoin who think that Bitcoin will become the global reserve currency of the world. I don't think that. I really don't believe that Bitcoin will become the global reserve currency in the world. Rather, I think we'll have a new system where basically everything, the price of everything else is kind of tied into the price of Bitcoin. So I think when, I have kids or my kids have kids, the concept of saying, what's the price of the dollar? Well, relative to the yen, it's this. What's the price of the yen? Well, relative to the pound, it's this. Well, what's the GDP of Indonesia? Well, do you want me to quote that in US dollars or in like the Indonesian currency, right? What's the price of oil? How do you quote things? I think Bitcoin will become the underlying settlement network and monetary network of the world, but all prices will be quoted in the price of a Bitcoin globally, but each country will still have their own currencies, and they'll just be central bank digital currencies, digital dollars.
Jason, it looks like we have a number of questions coming in from the audience. So why don't we go ahead and start bringing some people on here? Doug, miner Doug.
Hey, hello. Not a miner. I work for a chip company that accelerates compute, high performance computing, AI, and blockchain. So frankly, crypto, these hash algorithms are just a version of HPC, in my opinion. So our first chip out accelerates Ethereum and some of the altcoins, and due to market pull, we're being paid a ton of money to go do a Bitcoin chip. So we're going to do one of those and disrupt that market next and knock our Bitmain friends off the map. So I have to ask about Ethereum. There was a lot of talk about that. In fact, the Mining Disrupt was called the Bitcoin Mining Disrupt Conference, and a couple different speakers, including the guy from Hive and a couple others, really got on the Ethereum talk, and they talked about moving to proof of stake and when that'll happen and all that. But I think it'd be good to Goldman Sachs, Morgan Stanley, they think Ethereum's the hottest one, the highest raised, the most upside and all that. I don't think we should ignore. And that's also got other foundation, right, for crypto network, for some of the other potential supply chain applications, et cetera, right? So I think that's another good one to talk about, so everybody just doesn't walk away with Bitcoin in their mind, right?
I think that's a great idea, Doug. I would caution people from taking the word of like one of the larger financial institutions as gospel. As we saw today, JP Morgan just rolled out to all of their financial advisors worldwide. They just gave them the green light to let their clients, financial advisors tell the private wealth management clients to buy crypto funds, right? I think the minimum you need for that is like $5 million to be in the wealth management thing. The reason I say that is because 2 years ago, Jamie Dimon said if any of his financial advisors were recommending Bitcoin, he'd kick them out of the office. So right. I think you want to take all that with a grain of salt. With that being said, I think Doug makes a really amazing point. Ethereum is one of the most interesting things in crypto right now. Ethereum is powering something called DeFi, decentralized finance. Basically, so Bitcoin came onto the scene in January of 2009. Ethereum came onto the scene in 2015. Basically, you can think about Bitcoin as a way to send money in a peer-to-peer manner with other people. Ethereum gave you the ability to build applications on top of this decentralized blockchain. What's come out of that is something called DeFi. And DeFi is basically just a global open alternative to every financial service that we use today. So savings, loans, trading, insurance, it's all done on top of Ethereum using these decentralized platforms. That probably makes no sense, right? That probably goes over everyone's head because it went over my head for a long time. I think the premise to understand is that financial architecture is always changing. So in 1920s, right, we roll out punch cards and accounting machines. In 1950s, we get mainframes. In 1970s, we get ATMs, we get credit cards. We get the stock market trading pits being replaced by computers. In 1990, we get internet computerization of finance, bank accounts, buying stocks, all that you could do from home now. In the 2000s, we get fintechs, right? PayPal, TransferWise, Robinhood. DeFi is just an extension of this. So don't think of DeFi as some weird crypto thing with a bunch of nerds running around on the internet, building what a friend of mine called Wall Street on LSD, right? It's just an extension of financial architecture improving. So yeah, I think Doug makes a great point. I think Ethereum's really interesting right now. I can talk about it more. I just don't know how into the weeds we want to go.
We have a couple other questions here, Jason, and before we bring them on live, one thing that I guess your response there kind of triggered me on is this whole DeFi conversation, right? Decentralized finance. And it's actually, I guess, a timely discussion for us to have because if I remember correctly, just this past week, Blockworks, you guys announced a 5,000 person conference, the world's largest DeFi conference. What the heck is DeFi?
DeFi is the most exciting thing happening in crypto today. Let's go back to the financial infrastructure improving, right? Financial infrastructure has improved a ton. If I use Venmo, right, I can send you money instantaneously. That's what it looks like on the front end. On the back end, that's not what's actually happening, right? So here's some problems with traditional finance right now. Settlement of money takes days and requires massive amounts of human capital. Key decisions are made behind closed doors. There's billion-dollar banking scandals that are wiped off the table just years after the scandals. There's massive inefficiencies for international payments and they're super expensive. The equal access for globally is horrible. There are over 1 billion people that are unbanked right now. Banks hire thousands of people just to maintain inefficient processes and stay compliant. There's really high barriers to entry with huge regulatory moats, and this stifles innovation. And honestly, the last thing I would say is there's infrastructure that every single financial institution has to build from scratch. It's all the same, right? But they build this proprietary technology. So we launched a 5,000 person conference called Permissionless, focused entirely on DeFi. We've had at least 3 registrants from 15 of the largest banks already sign up. We've had 800 registrants in the first 48 hours. DeFi is completely re-architecting how money moves, not just how money moves like what Bitcoin does, but how trading happens, how lending happens, how borrowing happens, how saving happens. And again, I don't want to go too into the weeds because I'll bore the hell out of people, but yeah, I'm really excited about DeFi right now.
All right, let's bring on one more person from the audience. We have, I think, 3 or 4 questions here. Can we unmute Anurag Kumar? Anurag, can you hear us?
All right. No, thank you. I've been listening carefully. Some of the things are starting to make some sense, but I'm still trying to figure out, this one is the comparison of Bitcoin with Amazon or Google. Those are companies hiring people, producing goods and services, have some financial metrics, and there is a there's a reason for the value, and comparing Bitcoin value to them could be comparing to the assets a bank is managing. Maybe some Janus or Fidelity has $1 trillion they're managing. That doesn't make them worth $1 trillion. They just manage. So the comparison of the value of Bitcoin, which is the quantity multiplied by a price people are willing to pay, to a company like Amazon, I don't get it. So perhaps you can shed some light on why the two valuations are comparable and meaningful. The second thing is, besides being a hedge for your money, what else can Bitcoin do? I mean, at what point will it actually become like something usable, or is it always going to be like gold? You store it, keep it at home, you can't eat it, you can't do anything except it's something people will pay for, like artwork, but it can't do anything to run an economy. And to run an economy, you still need some tender, some things to buy and sell goods and services. So there's still some confusion as to why Bitcoin is existing. I mean, yes, it's decentralizing, or it's taking up power away from these inefficient financial institutions. But while doing that, what value is it adding for ordinary people like us to actually do something with it? So if you can just share your thoughts, besides the Bitcoin value going up every time Elon Musk opens his mouth, I mean, what else is driving the value of this thing? I mean, he comes in, the value goes up, he says something, value goes down. I mean, if something is that fragile and volatile, that a tweet from Elon Musk is going to change the whole value by billions, there's something not quite correct about it.
Yeah. All right. So I'm going to address three things there. One of them is Elon Musk, because I want to touch on it for a quick second, don't want to spend too much time on the guy. Then Amazon and the comparison to Bitcoin, and then Bitcoin being useful for the economy and for the world. Let's do Elon first and get that out of the way. If Elon Musk tweeted about Bitcoin, the price would, and he said, I just bought $100 million worth of Bitcoin, the price would go up. If Elon Musk says, I just bought $10 million worth of Dogecoin, the price would go up. If Elon Musk said, I just bought $100 million of GE stock, right, the price would go up. If Elon Musk said, I just bought $100 million, or I just shorted with all of my money, Apple stock, the price would go down, right? So Elon Musk is, that's just the nature of the financial markets that we live in 2021. He's done that before. He's done that with Tesla, and the price has jumped 20% in one day, right? So I think we live in a world, while some of us don't like it and some of us like it, people who are influencers like Elon Musk have an enormous amount of control over the financial markets. Reddit moved GameStop and caused hedge fund managers to lose hundreds of millions, if not billions of dollars. That's just the world we live in. So that's kind of the quick response to Elon. The second is the comparison to Amazon. The comparison to Amazon was just talking about their price, right? The price of Bitcoin to the price of Amazon. They're wildly different, right? They're completely different. One's a company, one is this decentralized monetary settlement network. Not really fair to make comparisons to the two. Just thought it was helpful to talk about the volatility of two different assets that I believe are both really good assets. Bitcoin, there's a lot of different ways to value Bitcoin, right? Bitcoin, I think Anurag, you were mentioning revenue of a company. Bitcoin miners generated $19 billion in revenue in the past 12 months, right? So this the Bitcoin network spit off $19 billion in revenue. It's a lot of money, right? So if Bitcoin were a company, the revenues would be $19 billion, okay? So that's one way to look at it. The other way to look at it is that, kind of like when I was talking about blockchain at the beginning of the conversation, for you, Parth, and me, Bitcoin does not have value, which sounds ridiculous for me to say because I think it's a great asset class. Bitcoin does not have value for you and me because our government works and our money works, right? but I have two friends in Venezuela who about a year and a half ago, the Venezuelan government said you can't own US dollars anymore. Overnight, the US dollars in their bank account were converted into the Venezuelan currency overnight. And they woke up, and so they had all this Venezuelan currency. So then what they do, they said, I want to send money outside of the country to my family in the United States so that they can keep my money in US dollars. So then what the government do? They put capital controls on Venezuelan citizens, so you couldn't send more than $200 a day out of the country. So for you, Parth, and me, Bitcoin does not have much value. But for a lot of people around the world, Bitcoin is changing their lives and has an enormous amount of value. So I think it just, beauty is in the eye of the beholder. And I think that's very true for Bitcoin. In terms of the last thing that you said, that was the last thing. So hopefully that tried to hit on all 3 points there. I don't know if you have follow-up questions or if Parth is moving on to the next.
No, I think
helpful.
thank you for that.
Yeah.
Really nice way to explain things which are kind of complex, and I think I really enjoy listening to people who can simplify a complex concept. And that's a skill very few people have. So let me ask you. I mean, besides a way to.
Oh,
yeah.
Sorry.
Go ahead.
I was just going to say, I think one of the easiest ways when we speak to, I don't know what you do for work, Anurag, but one way that we get called into investment firms all the time to just talk about it. And if you boil down the investment case into one sentence, right? The Bitcoin story is very, very easy. It's supply and demand, right? And Bitcoin supply grows at about 2.5% a year, and the demand grows faster than that. But there's a fixed number of them. So economics 101, first class in college, it's like supply stays the same, grows it by 2.5% a year. Demand goes up faster than that, price has to go up. And so that's
the reason for demand is still a way to manage your wealth. Is that correct? The assumption that it is a way to park your money, park your wealth, instead of doing it in rupees or pesos or bolivars in Venezuela, this is a safer way to park asset, because even US dollar, which we know a lot of people from Russia and China and India, they park their money in US, buying houses, buying bonds. China does that too. So is it fair to say Bitcoin is a way to park money outside of the government influence with the level of confidence that value will be there for?
Yeah, I think let's talk about the bear case for Bitcoin. If this doesn't really work, if this doesn't become like a global reserve currency, if I take off my tin hat and, just talking like normal terms, this is the bear case, right? I don't know if hopefully you can see my screen right now. The bear case is that Bitcoin just becomes digital gold, right? This slide says $1 trillion. It's got about a $600 billion market cap right now. Gold has about an $11.4 trillion market cap. Someone who's better at math should do the math for me, but that's at least a 13 or 14x increase. So at the very, very bear case right now, Bitcoin, I think, is a 10x from here as the gold for the internet, as just gold, which is easier to move around the internet. I think it will be much more than that. But yeah, the bear case is that it's just a store of value. It's a store of value that people who are digital first find interesting. I have a younger brother. I can guarantee you not a single one of my younger brother's friends are buying gold. I can promise you that. Not a single one of them owns gold. I know for a fact my younger brother's closest 20 friends, he's a pretty popular guy, 20 friends, they all own Bitcoin, right? Is because it's so easy for them to understand. It's digital money, right? Unlike gold. So yeah, bear case, I think it's just a digitally native store of value.
I think that's a good segue, Jason. Thank you, Anurag. Jason, I think that's a good segue into a question that I see here from Pradeep. Can we unmute him and bring him on here live? Hi, Pradeep. How are you?
Hey, thank you, Jason. Just as a follow-up to that question from Anurag, why do you think stable coins, especially those that are collateralized using fiat currencies, aren't more prominent than what you see today? I think stable coins have a overall market cap of over 100 billion. I think crypto is like 1.4 trillion if you combine all the cryptocurrencies. After all, you get, to your point early on, you get all the benefits of crypto, with instant processing and all the security and privacy of payments, which are and the benefits of relatively volatility-free, stable valuations of these fiat currencies. So why do you think that's not become a bigger deal? And the reason I asked that question, it's a leading question, is it because the average retail investor in crypto likes the volatility of crypto because that's how they get those value jumps? And I'm just curious as to why stable coins haven't become bigger, because you get best of both worlds there.
Such a good question. Yeah, phenomenal question. I think I'd push back and say they have seen a lot of interest. They just started a little bit later, right? So let's use a company like Circle. Circle is a very big client of ours. It was started by a guy named Jeremy Allaire. They just raised $440 million and they have plans to go public on the New York Stock Exchange soon. They run a stable coin called USDC. Every one it's called US dollar coin. It's pegged at a dollar, right? So the value of a USDC is always going to be $1 for people who don't know. Pradeep, it sounds like you do know this, but for the audience, it's a stable coin. It's like a cryptocurrency that's always at $1. There are $26 billion of USDC in existence right now. That's a 50x increase in the last 12 to 18 months. So if I looked at any asset, really anything out there, any technology, and saw 50x user adoption, I'd say, wow, that's impressive. There's probably something there. I think that stablecoins are becoming really big. I think that the market cap of stablecoins will be trillions and trillions of dollars. I think what we're going to end up seeing, Pradeep, is basically a competition between central bank digital currencies, stable coins that are issued by companies like Facebook and Circle and Gemini and Paxos, and Bitcoin. If you look at CBDC, central bank digital currencies, they're kind of funny to me because the US dollars are already digital, right? When's the last time you actually use physical cash? It's already digital. I think in the future, we're not going to see a competition between digital and non-digital currencies. Every currency is going to be digital. It's pretty soon, it's pretty inevitable. I think what we'll end up seeing is a competition of monetary policy. So that is where I see the world going. And I think that people are going to end up voting to store their assets in something like Bitcoin, because again, if a USDC is pegged at the value of $1, but the value of USDC of $1 is getting devalued every year, your USDC is still getting devalued. So those are my rambled thoughts on that.
Well, thank you. That makes sense.
Yeah.
Thanks.
All right. CN, can we unmute?
Yeah, okay. So my question was mostly around the fiat currency versus, Bitcoin or any cryptocurrency. A currency issued by a government is backed by government. It is stood up by government tax collection and what have you. But cryptocurrencies are not, and it's purely a function of how many you can create and add to the block, and that compute capacity can increase, can decrease, and whatnot. So what's your opinion on that?
I think the question is what, let me make sure I understand the question correctly. Is it that fiat dollars are backed by governments, but cryptocurrencies, what are they backed by?
Yes.
I think I'll answer it in a kind of an obnoxious way, honestly, which is going to be my response to, it's kind of similar to my response to someone else, which is in the US has backed the US dollar very well, right? Things have worked. in the US. But if you look at, I think a lot of Americans take US dollar stability for granted. Most people throughout the globe confront or have confronted massive currency collapses. Argentina, 1980, 1982, 1984, 87, 89, 2002, Brazil, China in 84 and 86, India, Indonesia, Mexico, Russia, Thailand, currency collapses, right? If you look at currencies that have depreciated by at least 20% against the US dollar just since January of 2020, Argentina, Brazil, Iran, Lebanon, Libya, Nigeria, Turkey, Venezuela, and Zimbabwe. So for you and me, I don't know where you are, Cian, in the world. For me, the US dollar has always worked, right? US government's great, right? My grandfather was a politician. I love politicians. I love the government. I'm not one of those crazy, Bitcoiners on the internet who hates the government. But keep in mind, for you and me and everyone in the US who's listening to this, yeah, the US dollar works great. For people in Thailand, Russia, Mexico, Indonesia, Iran, Lebanon, Libya, Nigeria, the government has not done a great job of keeping their currency stable. So that's where this becomes valuable. And it's not just the currency, right? There's systematic banking crises happening all the time in places like even Sweden, right? Very stable country. 1991, Sweden's entire banking system collapsed. Russia, Mexico, Greece, Cyprus. So that would be my response, is that just because a government backs a currency, it doesn't make it safe.
Okay, thank you.
Yeah.
So folks, Park, before we go on to your next question or from the audience, we are almost at 6 o'clock, but Jason and Parth, if you don't mind, can we go a little bit over a few minutes beyond 6 p.m.? Because one, we started a little bit late, but then there's a lot of interactive, and real good conversation happening here. And I don't want to stop it right at 6 o'clock, if that's okay. Jason,
Jason, are you good? Jason, you good with an extra 5 or 10 minutes?
Yeah, that's great. I'm just going to, in the meantime, if anyone has to drop, I'm going to just drop my Twitter and LinkedIn in the chat so people can add me in if they have follow-up questions, if they have to leave. But yeah, let's keep going.
Please stay on though. We have some.
I will. I'm in. Yeah.
No, even for the attendees, because Jason will say a few important things. And also we have a couple of very important things to announce. So please try to stay on if you can. Thank you, Jason. Parth, you can continue now.
Perfect. And Jason, I'll let you drop whatever information you wanted into the chat box while we bring on. All right, who is next here? Arshdeep, there we go. Let's see if I can unmute you.
I think I just dropped my stuff into the chat, by the way. I'm hoping I know how to use Zoom well enough to do that, but.
Hi, Arshdeep.
Hey, Bart. Hey, Jason.
Hey.
Thanks for all the info, man. Quick question on my end. I've been holding and buying Bitcoin consistently since 2017, mid 2017. So I've seen that big dip go through, and we're going through it again. What do you see in like the next coming years, maybe next decade? Would my local cafe or pizza shop be able to price a slice in Bitcoin?
I think that there are hundreds of thousands of places. I don't think it's okay. So I don't think it's actually about places being able to price things in Bitcoin. There are hundreds of thousands of companies all around the world and small businesses and restaurants that accept Bitcoin. The thing is, I forget the name of the gentleman who asked this question. Nobody wants to spend Bitcoin right now because Bitcoin is still really nascent. We're 12 years into this technology, right? Facebook has been around for 5 years longer than Bitcoin has. So we're still really, really early into this technology. And because we're so early, that makes it very volatile, but also that makes it so the price has massive appreciation and upside potential. And so Arshdeep, like, I'm assuming you own Bitcoin because you think it's going to go up. If you genuinely think it's going to go up, what are you not going to do? You're not going to spend it. And that's when stable coins come in. Blockworks as a business, we'll do 8 figures in revenue. We have over 100 different clients. We don't accept wires anymore. We don't accept wires as a business. Wires are an absolute pain in the ass. We get charged $30. We have to send the SWIFT info and the BIS info and the name, and my address got changed. So I don't know why anyone would accept a wire today. It's a crazy concept to me to send a wire. We only accept stable coins. We accept USDC. We're all set up with a USDC address. If Coinbase, a big client of ours, wants to pay Blockworks, they can send $500,000 to us and it'll show up in 10 minutes, right? So I don't think we're going to see, tying it full circle back to your question, no one wants to spend Bitcoin. Why would you spend Bitcoin? It's a appreciating asset. You're not going to go spend your Apple stock at the store. I think we will move to a world though, where you're holding your US dollars in a stable coin like USDC, and you'll be spending that.
So what is the real case scenario for Bitcoin? I mean, yes, I am holding it because there could only be 21 million of something in the world and I want a piece of it. And it could all, for all I care, is just, it could all go to zero, but I'm still going to hold it for as long as I can. So what is the real case used? Is it going to replace a dollar at any point? I know you said it could go parallel at the same time. So what is my case? What's my use case for Bitcoin a decade from now?
I'm not sure if you were on like 15 minutes ago, but I think the bear case for Bitcoin is it just becomes digital gold, right? It's a store of value for digital native people and businesses. Bitcoin right now is a $600 billion market cap. Gold has an $11.4 trillion market cap. So just that alone, we've got a 15x increase from here, right? That's the bear case for Bitcoin. I think there are a lot of, if I extrapolate this out far enough, where I think we go is that Bitcoin becomes the settlement layer for the entire internet, and all money in the world will move on the Bitcoin settlement, on the Bitcoin network. And things like everything will be priced in the price of a Bitcoin. That's 20 years out though. That's 30 years out. That's 40 years out, right? Because Bitcoin's too volatile. At some point, Bitcoin will just be, I don't know, it'll appreciate 3% a year, 4% a year. It'll be a stable asset. It's been around for 50 years, but that's far in the future. So right now, it's a good, I don't know, it's an investment and a store of value, depending on where in the world you live.
Got it.
Yeah.
Thank you.
Yeah, anytime.
Absolutely. And we had one more comment here, Jason, from Matt Berlando. The comment says, and what Jason is talking about could certainly happen in short order in the USA. Matt, I don't know if you want to
I think he's talking
come on and expand on that.
Yeah.
Sure, I'd be happy to. I'm just, my only point is, and I think it was ironic because I think I made that comment, posted that comment before Jason in the last maybe 5 minutes or so, kind of expounded on another question and talked about, the unreliability of currencies, not just in non-Western countries, but I think you touched on Sweden as an example of, a financial crisis and a currency crunch back a few decades ago. So, I think Jason hit it on the head after I made that comment that, we're printing money like crazy here. I know we've had inflationary periods many times before, and we've weathered through them. But, as Jason also alluded to earlier in the discussion, the US dollar has only been the global currency standard for 110, 120 years. So it's not impossible that, we may see the day where we can't rely on the US dollar as the standard currency. And if it can happen to any other Western countries, it can certainly happen here. That's my point.
I didn't want to say that because I seem crazy when I become the Bitcoin guy talking about inflation, but you said it. So I mean, to extend that out, I've been thinking about this a lot because the big conversation in the media right now is inflation transitory or is it not transitory? Basically, is inflation here to stay or is it short term and then it goes away? And I think actually what we get is, I'm not as pessimistic actually as a lot of folks who are big into Bitcoin are. in the short term. Long term, I'm extremely pessimistic on the US dollar. Short term, I'm not that pessimistic. I think what will happen is what happens in times of crisis and in times of inflation. Basically, every developing nation will end up selling out of their currency. There'll be currency crises all over the world in developing nations. When you move out of a developing currency, you then move into US dollars, right? You move into the strongest asset, the global reserve currency. So those outflows of developing nation currencies will prop up the US dollar and will actually keep it quite strong. The entire time though, Bitcoin will get stronger relative to the US dollar. So the US dollar will get devalued relative to Bitcoin. But short term, I think we'll see a currency crisis in a lot of developing nations, unfortunately. And then eventually folks who have US dollars move into Bitcoin when inflation in the US gets bad. So good call, Matt.
Thanks, Jason.
Yeah.
All right, Jason, I know we're running short on time here. Let's take one more question and then just move on to some of the closing remarks. Priyanka, are you on, and can we unmute you?
Priyanka is still on.
I'm here, yes.
Perfect.
Yeah, so I mean, my question was, I think, connected to what was just said. Like at some point, it becomes pretty much like constant, right? Like there's only so many Bitcoins that you have in the system. So at some point, it will pretty much become stable. And then either people are holding Bitcoins because they don't want to spend it. And then do you think at that point in time, the valuation will reduce because now people are just holding it?
It's a really good question. So all Bitcoin will be so Bitcoin has a fixed supply schedule. The last Bitcoin will be mined in the year 2140, right? So we've got, in all of our lifetimes, I mean, unless you're a big believer in like longevity and that we're all living to be 150 or 200, all Bitcoin will be mined after we're all gone. So it's not that big of an issue for us to think about, but it is a good hypothetical. I think that it all depends, Priyanka, on the global macro environment. If you're stable, your currency is stable, the world's going well, everyone's making money, there's not that much global, income inequality. Yeah, Bitcoin's not that enticing in 100 years from now. But if you have massive wealth inequality, if the currency that you have your money in is going through inflation, so the value of the currency is getting devalued away, I think Bitcoin becomes even more enticing then, because it's the only currency in the world right now that is programmatic, completely transparent, non-debasable, non-manipulatable, right? And can't be controlled by a single politician, organization, company, group of, we like to call them stale, pale male, people hiding in a room, right?
Yeah, I think that made sense. Actually, the whole point of yours about like it will become more competition about the monetary policy. I think that really drives the value of Bitcoin, because I would, like you said, like if I think the dollar will get devalued over a period of time because of the monetary policy, then you would want to invest in the monetary policy that aligns most with you.
That's exactly right. Great point.
Thank you.
Yeah, thank you.
All right, Jason, I lied. I said that was the last one. We have one more comment, and then we'll move on here and let everyone get on with their Thursday night. Anurag, you had a comment or a question?
So thank you, Parth. So Jason, I'm still wondering. So let's say I'm in Venezuela and I buy a bunch of Bitcoins, but I have to live in Caracas and I do need to buy a house there. Are we assuming that the money they have invested in Bitcoin is something they'll probably never use, and they'll still need some liquid way of buying things to live in the country of choice? I mean, is this a rich person's way of managing and storing money without having to use it? Or at some point, this might be used for some practical purposes besides creating wealth and getting away from the governments and saving your asset. But at some point you need your wealth to do something meaningful. And what do you think might be happening here?
I think that you
You know,
need your
a poor
wealth.
person doesn't buy and hoard gold. I mean, it's typically people of means who don't need the money, they would go and buy some gold. You can go to a grocery store and buy some carrots with gold. So you need to convert it into something useful. Where do you think this might end up being, besides being a way to store excessive wealth?
There's a community in El Salvador that the entire community runs on Bitcoin.
Okay.
It is a
So
way.
at some point, this might become a way to buy and sell things.
I, between, us on this call, I'm not going to sell my Bitcoin. I have a job. I make an income that can pay for, my mortgage and, some food. But so that's why I don't spend my Bitcoin. But if I didn't have that and I got paid in Bitcoin, I would then spend my Bitcoin, especially if everyone else around me wanted the Bitcoin. And so I think what you're seeing is, again, it goes back to the I think you're going to see basically developing countries, especially right now in Latin America. There's some massive news dropping in the next few weeks coming out of Latin America that's going to be really, really interesting. A lot of countries in Latin America have basically relied on the US dollar as their global reserve currency, and the leaders in Latin America see Bitcoin as a way to get off that reliance on US dollar dependency. And so I think what will end up happening is, in the US, you might not see Bitcoin being used as a transaction mechanism, but in developing nations, you will see it being used as a transaction mechanism. And I think the most important part here is that throughout history, if there's ever things like capital controls or currency devaluation, there's no escaping it, right? So dictators and countries and politicians, they can do things like capital controls because there's no plan B. But when you have Bitcoin, if you put capital controls on me as a citizen, I can just move my money and my wealth into Bitcoin. And that's the first time in history that's ever happened.
Makes sense. Thank you.
Yeah.
Jason, I think, this has been a great discussion. Thank you again for taking the time to do this. I think we might need to have a follow-up session
anytime
on crypto and blockchain, all that. Before we let you go here, Jason, what's on the horizon for Blockworks here, and how can some of the folks in the audience get involved for those who are interested?
Yeah, I'm dropping if people want to look at the company that I run, it's a media company called Blockworks. I have a podcast where I ramble on about sweet nothings once a week called Empire that you can find on our website. You can follow me on Twitter. You can add me on LinkedIn. I'm always open to more conversations. We have a 5,000 person conference that we're hosting in spring of 2022 called Permissionless. Tickets were $15. They've gone up to $49. If $49 is too much for me or for you, message me and I can get you a big discount code. That's going to be the best thing that I've ever been a part of in my life. We've sold 800 tickets in the first 48 hours. So we have 4,200 tickets left to go. So I'd love to see people in person at Permissionless. But before then, if you want to get in touch, shoot me a note on LinkedIn or Twitter.
Thanks a lot, Jason. And thank you all for the engagement here today. I hope everyone found the discussion to be informative and helpful, at least to some degree.
Also about Ty Austin, I would really recommend that people get more involved with Ty Austin, because I want to thank Jay Shri and Parth and just the entire Ty Austin organization for hosting this, because there's a lot of organizations out there that are pretty closed-minded to things like Bitcoin. And I think it's important to at least just have conversations around them. And who knows, I could be dead wrong about all this, but I think it's important to have a conversation about it.
Thank you, Jason. Thank you, Parth. And sorry, attendees, to go over your time limit here, but this has been very, very, very great discussion. Honestly, loved it. And Jason, we will share Jason's contact, all of his credentials, everything via follow-up email. And we will also share this recording on that email. We typically do, and we will do that even for this one. And so feel free to ask us or send us your questions. We will feed those to Jason, or you will have his information. You can contact him directly, not a problem there. Do encourage that though. Thank you, Jason. Thank you, Parth. And I'm going to cut short here and not going to go on more thank yous here. I have a couple of quick announcements here, please. Our next event is next week on Tuesday. We do a monthly social where anyone and everyone can come, connect, network. We always have our average, 50 to 60 people attend. We provide food. It's a lot of fun. You might have an opportunity to say a few words. It depends. So the surprise is always the case. But I encourage you to RSVP. It is on our website, austin.thai.org. All our upcoming events are always on website, and everything we do is always on website. So be sure to check on our website very regularly. I'm very excited to announce this coming event in August. For the first time, Thai Austin will have a pitch competition for women-led startups here in Austin. And we will be awarding 2 top prizes, financial, the checks, company monetary, as well as the winner will go to Dubai for their trip to present and pitch in Thai Women Global Competition. And Thai Austin is paying for the airfare, all accommodation, everything in Dubai. And we are very excited to announce this. And please, please try to attend this if you are in Austin. Jason, I would love for you to come by at that time. And we'll host you anytime, not a problem. So let us know if you can. And Parth, if you can be in Austin, that'll be awesome too. Thank you. And I encourage everyone to attend. But again, RSVP on our website, because this pitch competition will have limited seats and it's a very popular one. So anyway, I look forward to seeing you. Thank you all. Thank you from everybody at Thai Austin. Please support us. Join us as members if you are not a member, because we are done with virtual webinars and virtual events now. We are all going to host in-person events. This was our last virtual event for this year, and in-person events. Pitch competition is a free event, but after that, if you're not a member, you're going to pay something to attend our fabulous events. So I encourage you to join as a general member, if nothing else. Thank you all. Thanks for spending your evening with us, and we'll see you next time.
Thanks, everyone. Talk soon.
Thank you, guys.